The market's been rather volatile for the past couple of days. I just wanted to get a couple words out there, let you know what we're thinking, what we're doing, and what our plan of attack is. Past 3 days have been pretty volatile. This morning, the stocks weren't looking that good at all. The NASDAQ, the Dow had some pretty serious declines. And I think a lot of this has to do with the jobs report that came out last week. Having been doing this for quite some time, I would say that back in 2008, the worst time of the day for me was between 3 and 4. We would see 3 to 4% swings at the end of almost every day. In 2020, everybody's kind of familiar with that. We saw a 20 to 30+% dip in the market in a 30-day period of time. Each time, if you remain consistent in your approach, over a period of time, you recovered, and we actually had a pretty good year. 2020 actually been a pretty good year. So what are we doing in light of everything that's happening right now? And first of all, we're talking to our investment team. We have a very talented investment team at OneDigital, a lot of CFAs and people that look at this stuff on a regular basis. And I like bouncing ideas off people before we do anything. We're taking a look at what the Fed is doing, and the Fed seems like, depending on what's happening here, is they may be reducing some of the interest rates, which again is a way of putting gas into the economy. When you raise rates, it puts a brake on the economy, and it might be something that they're going to be incorporating there. We're also taking a look at bonds, which I think are very attractive, and we've been talking to people about that. If the interest rates are declining, bond prices should have a positive impact on that. And depending on how volatile this is, we may rebalance. And back in 2020, I would say in April, after all the volatility that we saw, we rebalanced our portfolios, which was one of the best things I think we ever did from a timing standpoint. And anytime we see this volatility, we want to basically use that as an opportunity to buy things at a discount. The economy is not shutting down. Again, what we focus on as an organization is that our focus is more on value stocks and growth stocks. I like companies that pay dividends. I like people that are trading, or companies that are trading at lower multiples. And in a volatile market, it usually does relatively well. Like in bonds, love in munis and taxable accounts for some of the people, because we're getting reasonable rates now that we could lock in. And if the interest rates are going to decline, this should be a very positive thing. The jobs report, I'm not freaked out with that, because the Fed was raising rates for the past 2 years in order to slow up the economy. And after a period of time, if you keep your foot on the brake, it's going to slow down. And that's exactly what we're seeing. So I think it might just be an indication that the Fed needs to do something a little bit different. I feel pretty comfortable with the banks, that they're pretty solid. The only thing that really is out there that concerns me is some of the commercial loans on some of the properties that are out there. But other than that, I feel pretty good about them. And I think it's a great time to be buying. If you're actively at work and you're participating in a 401k plan, do not stop. I love buying things at a discount. And this is an opportunity to buy some things that a month ago we saw as being attractive buys, and we could buy them at a discount. So the last thing I'll always say is that the tortoise always wins. Never bet against the tortoise. Slow and steady wins the race. If you remain consistent in your approach, and we make very small changes over time, I think we're going to get consistent rates of return. And if you have any questions, please feel free to reach out and give us a call. We're here for you, and we'll do whatever we can to help you through the situation. But I'm not overly concerned. I think this is just a blip in the market. It's going to adjust, and we're going to be fine. Call us if you need us. Thanks, everybody.